What is a lot size? A lot size. When you're trading all the CFDs, including the indexes such as volatility, Bitcoin, Euro USD. For you to better understand a lot size it's a volume. This lot size, it's a volume. This volume determines what? Determines the amount of money that you will need in terms of what? In terms of margin, as you can see here. The lot size is a volume that will show you how much units you buy or sell. How much units you buy or sell. Now, whenever we're trading what? Units, which is the contracts. Okay, we're trading the contract, and the contracts we're looking at what? We're looking at the contracts for difference, which is we're looking to actually profit the performance or the value that changes in a certain given time. Now, when we look at this lot size of 0.01, what does it mean? It means that we actually buy what we bought here, 1,000 units. So when we're talking about the volume, a volume will actually what? Will show us how many or when you're listening to a radio, you will actually what? You will use a volume to what? To increase or decrease. Now, a volume is just a measurement of how many, and knowing how many, you will actually what? Have a price. In this case, we have this lot size here, which is how many units did we buy. We bought 0.01. This is the volume. How many units is 1,000 units that we bought here? Because contract size that we are trading with, brokers to brokers, they are not actually the same. So brokers, they're offering service. If you're going to tap on any asset, let's say right now you tap on any asset, this is MT5, you can also do this in MT4. If you tap on an asset, you will see what? You will see details under when you're using an iPhone. If you're using an Android, you will see symbol details, okay? Or property details, okay? Or symbol properties, okay? Now you will click on this one so that you can be able to land on this page here, or on this section over here, so that you understand the parameters, the criteria, the structure, the plan for you to actually trade this asset. As you can see here, we have what? We have a contract size, which is 100 of gold. Okay, so now this is the standard contract, which is there that they've set. This is the standard contract. This contract represents that if right now you decide to open a minimum volume, if you go down, scroll down, you will see that we have what we call a minimum volume of 0.01. Brokers to brokers, they're not the same. So the contract will actually what? Sometimes if you're trading, maybe let's say Nasdaq, some they are confused on what's happening because the contract is not the same from brokers to brokers. Some brokers they have 1, some brokers they have 30, some brokers they have 100. Now, they have what you call a maximum volume of 10. Brokers, they're not the same. Remember, brokers, when you buy, they have to sell. So they can only sell to you a maximum volume of what? Of 10,000. If right now, of 10, sorry, not 10,000. If you say 10 times the 100, it will give you what? It will give you a certain amount. Now, if you take the 0.01 and times the 100, it will give you what? It will give you a certain amount. So that's the units. Those are the units that you are buying and selling. So now you will actually easily see what? You will easily see the units that you have on the MT5 or the MT4 that you'll be using. You'll easily see the units that you are that you actually what have. So in this case, this is quite simple to understand, and it's not that difficult for you to have an understanding with the unit. So now, as you can see here, we have 0.01, which is Bitcoin units. Okay, and this unit, once you have this unit, you can easily count the price with the price that you bought from. And then that will initially give you what? The margin money needed. And then broker will offer you a leverage is 1:1,000. So in this case, you need to divide, and then you actually have the margin that is actually needed by the broker, not by the market. because a broker will offer you what? A service. Just like when you borrow a loan, they will need you to have what? To need you to put a certain percentage amount of money to the money that you're borrowing. So that's the same thing with the bank. So banks is like a broker that is in the middle between you and what you want. It's the very same thing what is happening with the broker. So a lot size, it's in this way. However, we need to understand that a lot size will also count the points value. In this case, if right now you open 0.01 of Bitcoin or Euro USD, as you can see here, we're losing 0.12. If right now you minus these two prices, you will get a certain difference in prices, which is we call it points. And now points are quite simple to understand. For those who do not understand about points, I would love you to actually have another lesson on this channel. But for now, let me just share with you just a quick guide on what's happening here. You can see here we have a sell of 0.01. The points is actually what derived or actually counted based on what? Based on the price where you sell or buy, and then on the price where it's actually the market is moving. Now let's just make an estimation that you can see that we have 71 points here as our stop loss, because we can see the SL here, which is we are losing 0.63 GBP, because the account balance is in GBP. I mean the account base is in GBP. This is USD chef. And if we just take a look at what's happening here, we understand that the value of the point is 0.63 GBP, which is equivalent to what using the 0.01 lot size. So we get what? We get the 0.63, because if you say 0.01 times by the points there, we get the money that we are losing or profiting in chef, and then we need to convert it to GBP. The broker does that automatically. We don't need to do anything like that. As you can see, we have our TP here, which is in 70 points, which is devalued at 0.62 GBP. Now, this is based on what? Based on the lot size. The lot size represents the number of units. So the lot size, it's a volume. The more you increase it, the more you make money, the more you lose money also, which is here. As you can see here, these are the arrow for decreasing, this is the arrow for increasing. So this is the volume to actually count the units that you are buying or selling, right? So a broker has a maximum unit so that they can actually protect themselves in case of that they cannot afford more than that. They cannot afford to actually sell more than that, because when you actually buy here or sell, and you could just say the graph keeps going down, you make profit. When you get out, the broker needs to take the loss, and you need to take what? The profit from the broker. However, that's the simplest way for you to understand. The broker, they don't work like that completely, because they have investors, they have many liquidity providers, which is including investors, including hedge funds. There are many, so there are many involved in that broker. So broker to brokers, they're not the same. Brokers, some of the brokers, they don't qualify for them to actually have such investors, which is in this case we have a prime of prime. So we have many brokers that are involved in that system. However, some brokers, they're actually working in the house, meaning that whenever you buy or sell, they are working in the house because they don't qualify, they have less clients, they don't qualify to be in that range. So now I believe you understand what a lot size is. A lot size is just multiplying how much money you make and how much money you lose, and how much also money you need. How much money also you need to trade. How much money also you need to trade with the margin. With the margin, I believe we understand each other. How much money you need to trade with the margin, I believe that actually makes sense to you. So a lot size is the number, is gonna count the number of units that you're actually buying or selling. And then once you see the number of units, you can be able to easily calculate the margin, which is now you take the number of the units times by what? Times by the price. Now once you times by the price where you buy or sell, you will get the initial or the actual money that you need, and see that Forex is expensive. and then a broker will divide the money by the leverage, which is the 1:1,000 that they're giving you for if you're trading forex, if you're trading stocks, if you're trading EFTs or stocks indexes, given that you're using a best broker for you to offer those services. So now I believe it makes sense to you, and then you will actually make a best decision in understanding the market, and you studying the market, in investing yourself, in actually trading. So be blessed. I love you all. Stay tuned. Stay alert.